So let's look at the overall audit strategy in this video. So after preliminary engagement activities, like after ensuring that the ethical requirements are met and the terms of the engagement are understood by the entity, an auditor establishes an overall strategy. It is also called audit planning memorandum. Like a strategy, it's like the direction that you're going to take. Yeah. So the auditor establishes an overall audit strategy, and the strategy sets the scope, the timing, and direction of the audit. And it includes the following. So we are going to look at the main areas of an overall audit strategy. First is characteristics of an audit. Yeah, for example, the financial reporting framework, the auditor has to understand the financial reporting framework, the industry-specific requirements, the expected audit coverage. The auditor has to understand the nature of business segments to be audited and the need for any specialized knowledge. The auditor also has to understand the availability of the work of internal auditors and the extent of reliance on such work, whether there is work done by the internal auditors and how effective it is. Then the use of service organizations. The auditor also has to understand the effect of information technology on the audit procedures. And lastly is the availability of client personnel and data. So those are the things that are under the characteristics of an audit. So the auditor has to understand the characteristics of the audit that is going to be carried out. Second is reporting objectives, timing of the audit, and nature of communications. So the auditor has to know the entity's timetable for reporting, since every organization has its own financial year. Then the organization of meetings, like how will the auditor be able to meet management and those charged with governance. Then discussions that will be made with management and those charged with governance. And lastly is expected communication with third parties, whether he will be able to communicate with third parties, how and when. The third main area of the overall audit strategy is the significant factors and developments. First is the determination of materiality. The auditor has to understand what is material to that entity and what is not. Then secondly, areas that are identified with higher risks of material misstatements. Then results of the previous audits. The auditor also needs to maintain professional skepticism, like being alert to conditions and have a questioning mind. Then has to obtain evidence of management's commitment to design, implement, and maintain a sound internal control. Then has to look at the changes in applicable reporting framework with significant new or revised disclosures, whether there is any change in the applicable financial framework. Then has to look at the volume of transactions of that entity. The auditor has to look at the processes used by management to identify and prepare disclosures. Has to look at significant business developments, like in case they came up maybe with a new system. Has to look at the significant industry developments in case anything was changed in the industry. Then has to look at significant changes in the financial reporting framework and other significant recent developments. Then the last main area is the nature, timing, and extent of resources. And this involves selection of the engagement team that is going to work on that particular audit. Then assignment of work to team members. And lastly, engagement budget. So that is all about the overall audit procedure that determines the timing, the scope, and direction of the audit. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends, and let's catch up in my next video.